The focus is starting to shift towards the SGX Singapore 5X Levered Index as the correlation between both of these assets rise on the weekly time frame. Some major time frame closures happen today that can be considered a beat for the bulls. Let's see what the charts have to say as we head into the US GDP. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into ticker symbol FNGR. What is up, you guys? Thank you so much for stopping by once again. Let's dive in straight into ticker symbol FNGR, and this is the economic calendar that you are viewing here. And on September 28th, we are going to be expecting the GDP growth rate quarter over quarter final. So this, I have a feeling that could lead into some price fluctuation. So we have to prepare ourselves for that. Okay, so let's go ahead and take a look at the SGX, which is this right here, the correlation chart between the SGX and the FNGR asset. So what I did here is that I added the SGX price action right over here, and I added the FNGR price action here. So you can see that there have been times to where there's deep correlation, right? And then there are times too to where you can see some inverse correlation as well, right? Particularly here too. Right. So, but what I'm starting to notice here is that with this candle that faced a serious pressure to the downside, so did the Singapore asset. So this now is starting to show me that we may have to keep track of the Singapore index in order to, kind of gain an edge over the FNGR asset. Let's move on to the next chart. All right. So what I'm liking here, team, is that there is a very clear decline in volume. Right? You can see this here with declining price action as well. And that usually signals an exhaustion of bear strength. Okay. So, or the exhaustion of bears in general. Now, another thing to mention here is that you're getting a back-to-back read, some inverted hammers on a daily time frame. So this is usually a pretty good signal after a downtrend, right? And does signal the potential of incoming bull strength. Okay. So, so let's go ahead and now move on to the next chart, as I believe that was it for that chart there. Okay, so here's the manipulation chart that we were speaking of during today's session. So yes, we did catch one manipulation signal right over here, which essentially sent the price from that 505, 506 target all the way down to $4.96. And very curiously enough, right at the after hours trading, it looks like the bulls try to gain some control. So please notice here that you got two manipulation signals back to back. So you got that one shot here, bam, the price actually went up for a little bit. You got another shot over here, and then bam, another drop, and eventually got a bull trap here and fell all the way to the, or I'm sorry, this could have been, I don't want to say bull trap. I really don't catch bull traps in anything under an 8-hour time frame, to be clear. Right, but in this case, it looks like it could have been a quick little liquidity grab here, and then price action came down to eventually that 495 bottom before recovering entirely. It feels like the bulls do not want to let go of that $5 target still. And I mean, some downside targets of around 467. I mean, well, particularly between 485 and around $4.30. There's a lot of attention there for the bears, right? So I'm not sure if we're going to be able to succeed that. I'm not sure if we're eventually going to reach it, but the targets are there still for our evaluation, and we must respect them as long as we are near them. Okay, but if I can say anything right now, what I can definitely say is actually this: as long as price action stays above these candles here, particularly this wick low, which is let's see, the L on the top side over here, right? As long as price action is below is above $3.85, this the price action still belongs to the bulls, and this is not letting go. And the reason why I say that is very clear. This is the inflection zone from a massive pump. Okay, so we got that huge upside price action, and then price actually came back down to that 385. Where from here the price action never touched, right? This was 396 here, and then continued onwards and upwards to $7.97, where we officially broke out of this formation regression line, and now we're coming back to maybe validate it. Now, know for a fact that we have several candles that have validated that support already thus far. And, this candle doesn't have to actually reach all the way down to 460, but if it does so, we're already prepared. We're already seeing what that probability could be. But if the bulls so feel like taking the upside from this point, it would actually still be fair. But remember, as long as price action is above $3.85, this still belongs to the bulls, as this would be the inflection zone. Closing, I would say at least a very minimum daily candle beneath the area of 385, that can lead to a serious capitulation, which would eventually make price capitulate from 385 to 258 almost instantly. Okay, so you definitely have to know that is our inflection zone. Okay, so let's go ahead and come back here to the other charts, as there are signals here that could be potentially suggesting a recovery. And what I mean by that is that you can see none of these 12-hour candles let go of the outside of the top side of the regression from this pennant. Okay, so that is very powerful. And in fact, today, right at the after hours, we reclaimed the outside, thus closing at $5.20 from a drop all the way to 495 or for let's see, how low did it go? Wow, 484. Man. So congratulations to you if you were able to capture that 484 bottom side. That actually led to a nice bounce here, and you are presently sitting about 7.5%, just over 7.5% to the upside. Very good times. Okay, so yeah, reclaiming the outside of this pennant would mean that we're in the process of validating this support, right? This was a resistance. They resisted, and now we're breaking outside of this. We're supporting now, right, and validating that support, and then we could actually see what price action can do coming in the next week. Okay, so that's looking pretty powerful. Next thing that we want to look at here is the regression. This is the reversion variant. So these are Bollinger Bands that you're looking at right in the outside. And as you can see here, for now, this is actually we're already knocking at the door of the mean band. Okay, so this is a break of market structure. We were capitulating here and continuing a very heavy downside until we weren't. We're actually finding a balance here, and we're consolidating. Now, consolidating with an upside pivot on stochastic momentum, which is very important. The mean band here is located at 525. So this feels like we're about to break outside of that mean band and start heading towards the target of around $5.88 or $5.90. Tweezer top right at that 590 here. Okay, so if we do get a small pullback, I expect a pullback to happen right at about $5.42 to come back and validate the 525 as a support before continuing on to the upside, thus succeeding that $5.90 tweezer top and the Bollinger Band top side. That would be 2 standard deviations away from the mean. Okay, so for those of you who are mathematically inclined. Okay, so now let's. I think that may have been it for those charts there. And yeah, let's see if I want to touch down on anything else. Right, yeah. So here are the resistances, right? 528 to 537 for a shorter time frame outlook. And one more thing that we want to see here is that there is a little bit of an inverse herpy-derpy happening right down here, right? So that's a inverse head and shoulders formation, right? So this is your shoulder, right? This is your head, and this is your right-hand shoulder. And now there is a, there is a neckline here. So let's go ahead and find where that is. In fact, the neckline may, in fact, be a regression. So let's go ahead and just kind of put it down like this. Right, and this could be, man, you know what? I feel like I'm going to favor this one instead and see if I can kind of get it down like this, right? Yeah, it feels like that's about it here. Okay, so, yeah, oh, yeah, nice. Yeah, that definitely feels like it. Very cool stuff. All right, so yeah, let me go ahead and I just wanted to make sure that this contact point touches this one, and this one, right? So let me measure the top side target here. So you take a trend line from the, from the head to the neckline, and then you apply this to the top side of the shoulder, right? So in this case, the price target coming up is around $5.70, which is already showing some rhyming with the top side target that we're looking at based on the what was it, the breakout that we were just looking, oh right here, $5.88. So 569 or 570 is located right about here. So if that's going to be the zone that we get that pullback, so we get that 570 pullback, validate 525, then complete the 590. That could certainly be in play here. All right, so yeah, the targets are definitely rhyming and they're looking very nice. So let's go ahead and now look at the RSI. Take a look at this 30-minute time frame bouncing from that SMA 14 with an upside pivot, very convincing. And this upside is already bleeding into the bi-hourly time frame, which is sitting right at the gravitational zone of the bear weakness percentile, and we have an upside pivot on the moving average as well. So very likely for these timeframes to start moving onwards and upwards. And it looks like the upside pivot from both the hourly, I'm sorry, the 30-minute into the bi-hourly is already feeding or cascading into the 4-hour time frame. Notice how we were bouncing right from the gravitational zone of the bear strength percentile right over here and using that SMA 14 as a support. And now we're upside of the gravitational zone from this bear weakness percentile. So this is the danger is being presented as a less likelihood here for the downside, right? So good, very, very good. Now, as we start to see these time frames here, like this is the 8-hour time frame, it's consolidation, right? I mean, fair enough. It is, to be fair, sorry. It is in the gravitational zone of the bear weakness percentile, which could lead to a downside. But I must remind you what's been happening here. As soon as we reach this gravitational zone here, the bear strength percentile, we're bouncing up. Then we reject, then we bounce again from that gravitational zone. So it looks like we're just consolidating here, right? So what I am noticing here is that on the 12-hour time frame, we're getting very close to creating a bullish crossover. And I must say that this the RSI signal is at 43%, which is outside of the 42% from the gravitational zone and the danger zone, right? That would be a critical area for us to, kind of face a downside. So this may have the shot to succeed the upside of that SMA 14. We have to see what the pressure from the shorter time frames will do, though. So as long as these show enough thrust to the upside, then all of these time frames will start cascading into one another, right? So now, naturally, the bi-daily time frame is consolidation, slight downside pivot. You have a slight upside pivot on the daily time frame here. Well, let's look at the 3-day, and yeah, actually, there we go. The 3-day, same situation as this one here, right? Consolidation, and this is year. Let's look at the 5-day time frame and consolidation on the 5-day time frame too. Yeah, so these time frames here, the larger term time frames are definitely, absolutely waiting for the influence from the shorter time frame. So we're gonna have to just observe what that does come Monday, okay, you guys? But know that I'm going to be streaming live, so come by around 6:45, 6:40 a.m. Pacific time, and we'll be streaming these. We'll be observing the markets, okay, team? So yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good weekend, and I will catch you at the bell on Monday. Adios.